Wow, that's quite a statement that the U.S. home insurance system could collapse. This was a great video that was on one of the major YouTube channels. And what they're talking about is the major insurance companies and reinsurers are having a tough time placing coverage for residential homeowners markets, property and casualty markets. And the reason why is because the proliferation of natural disasters, hurricanes, hailstorms, tornadoes, earthquakes, fire, is creating a larger claims experience for these insurance companies than they had planned for. And you would think, well, just charge higher rates. Well, they could do that, except for the rating system in most states is required that you put in a request for higher rates based on your prior claims experience, and then you have to wait a year or two for them to approve it and then put them in place. So for that 1 or 2 or 3 years, you're losing money on all of your policies. And some insurance companies elect just not to sell insurance anymore in a state where they can't get the right rate, or they have to close because in order to stay viable and licensed in a state to sell insurance, you have to have a certain amount of cash available to pay claims. And if you're not taking in cash fast enough to replenish your supply, you're going to be underfunded and you have to close. And that may be something that creates a void in available coverage, even for homeowners that are not in a disaster area. Maybe you're not in a flood zone, maybe you're not in a major earthquake zone. But if you're in a state or a region that those claims affect your policy rating, you could be out of luck. So there's a few options for this, and we've talked about them before. You can also click below for some consultation about your particular scenario. There's parametric insurance that can fill some of these gaps. You may be able to adjust coverage to a different weighting system where you have different deductibles, different limits that allow you to still have coverage. You can also do exclusions from coverage. You have to make sure that if you have a lender, a mortgage company, that it's allowed under your mortgage contract. But it may be time to look at some non-standard insurance options. And you can talk to your agent about it, but sometimes they may not be aware of some of these options, to make sure that you have coverage for your risk. You don't want to be, uninsured, because if something happens, God forbid, you're going to lose everything. But you also want to make sure that the coverage matches what your risk tolerance is and your appetite for taking losses, but also your ability to pay based on your finances. So the takeaway from this is it's a different environment for insurance, especially property and casualty. So look at your coverages and talk to an expert. You can click below if you want to do a consultation about how to structure an insurance profile for you and your family that doesn't break the bank but still protects you from a catastrophic loss.